Let me know how you guys are doing today. I know it was a pretty volatile trading day, a lot of signals, a lot of stuff going on. So it should have been fun. Hey, everybody on YouTube, we're going to get started in like a minute or so as people join in. And what we're going to be talking about is why the market moves fast and how we can capitalize on it in a few different ways. And specifically, what we're looking for before price moves, which is key, right? We have to know what's causing it. Therefore, we can know when to expect it. So give me a few minutes, let everyone hop in, and then we'll get started. And for those in the chat, let me know how your day went. What did you trade, if anything? Did you not trade? Did you take a ton of losses? What happened? And towards the end, we can talk more about that. If you have any questions throughout the stream, just let me know. Yeah, did you guys see silver today? That was crazy. Lost a funded after 130 days. Hopefully you got a payout on that. It's a long time. But that will happen. You just got to get up again. 5 payouts. Beautiful. The righteous fall 7 times and get up again, right? So just keep at it. Let's see. Had USAR calls, closed 400% at the open. Sometimes luck is at my side. Let's see. Nice, right? In a pretty nice move in there. You can see what happened. The monthly inside bar signal gapped up overnight with the monthly buyers. Very cool. ZSL on the 15er. Ooh, this could be a fun one. Let's see. What, the 312? I'm not seeing it. Was it at the open? Might have been. Nope. There's 0 312 15ers today, so I'm not sure what you're seeing. Took profits on the Intel put. Nice. At the close, I actually added some back to it once off the 60. Not seeing your screen. Sorry about that, guys. In Discord. But here it is. All right. Well, now that we got everyone involved, right? Let's see. Just watching and trying to learn. That's good. So when you are trying to learn, what we suggest is once you see what we talk about here, the best way to practice is to use a 1 minute. If you go to indexes, something that's liquid, that's moving. If you look at a 1 minute, it's going to update much faster, which allows you to practice seeing things because you're going to see stuff like this, the hammer, right? And then off they go. You can see they just keep going. You'll see the hammer here, the inside bar here, right? And you can see how they cause the movement and you get a lot more practice. But let's see, GameStop after CEO news. Yeah, I saw that some people were buying that on Twitter. Which if we look at GameStop and we see what we're reclaiming here, go one time frame. Look at the monthly, you can see we reclaimed a lot of these lows. So technically GameStop, $35, but the month ends off soon. The quarter's inside. The year is inside, so you don't got much happening, although it is firm. You're watching silver to go short. Ooh. ZSL. Ultra short silver. Yeah. So if you're going to short silver, it would have been this, and you'll see why this happened today. So let's get started. As far as when it comes to getting fast moves, which is important if you're going to get options that go, 1,000% from your entry, or if you're going to buy a stock and it's going to go up 70% after you buy it. The question is, what happens before it goes the 70%? Like what happened before silver, you can see dropped 6% in 1 hour? Why does that happen? That's going to be the first question we answer, and we are going to agree on the logic, and we're going to agree on how we find it. So the first question is, what causes price to move? And it's pretty simple. What causes price to move, let's just go to like Bitcoin, for example, is this. So if we go to settings and we go to scales and lines, what you're going to see is we can have the bid ask, and we can show the value and we can show the line. And in this case, Bitcoin has like $1 spread, so not much. Let's just go to like the futures. I'm going to have a little bit more of a spread to look at. So this is what we see. So the bid is the price at which buyers are willing to buy. Like imagine you walk into a pawn shop and you're like, well, I got this phone. What will you give me for the phone? They're going to lowball you and they're going to say, I'll give you $50, right? Even though the phone's worth way more. That's the price they're willing to buy. So they want to buy cheap. And then the ask is the price at which sellers are willing to sell. So it's like if you walk into the pawn shop and they offer you $50, right? Much lower. And you're like, no. I want $100, right? So you have a spread. You have the price someone's willing to pay, the price someone's willing to sell. And this spread could be 1 penny. It could be $10. It depends on the asset you're trading and the liquidity of it, which is simply how easy can you buy and sell it. So when we're looking at the futures, right, this spread is very small. If we look at this, it's like, what, half a point. This is on US 500. If we were to look on ES, it is delayed, but you'll see it's like half a point ES, 0.25. So a fourth of a point. So the spreads are small. But in order for price to go up or down, what has to happen is we have to see buyers that are willing to buy at the offer. And we have to see that higher than what it was previously at. So when we're looking at ES right now, you can see the bid and ask are higher. But notice this bar has not moved. Why hasn't it moved? Because no one was willing to buy yet. No one's willing to sell yet at these prices. So price has not moved. And the reason that's important is because in order for us to see it move, we would have to see a buyer that's willing to buy up here, or right, a seller that's willing to sell at the bid up here, right? At this point, neither of those are true. So the candle, the current price, has not moved. The bid and ask have moved. So in order to see a candle go, from down here all the way to the highs, we still need to see price trade, right? It still hasn't traded. So when we go look at, 1 minute, what we can say is in order for this candle to open here, we're going to really blow it up here for you. Open here at 6978 and then close higher at 6979. We had to have people that were willing to buy or sell higher. And in this case, the buyer is more aggressive. It's going up. And that's what the green shows you. The buyer is taking the offer. And then you'll see the buyer is taking the offer. And at this point, buyer's taking the offer, although nothing's traded. Now you might say, well, does this really matter on 1 minute? If volatility is high, yes, it does. Because if a 1 minute goes green or red, it changes what's happening at that moment. But where it matters more is when we go to like a yearly chart, because it shows us what they're doing this year. So in order for this year to open at 3895, if you look at the futures, and then close at 4823, so going up 900 points. In order for that to happen, the year has to open and be green first. And what that tells us is buyers are willing to pay higher prices. It also tells us that sellers who want to sell at higher prices, they're getting what they want. The prices are going up. So sellers are getting what they want. Buyers are willing to pay higher prices. The same thing occurred in 2024. Buyers are willing to pay higher prices. Then you'll see in 25, we went below the yearly open, and then sellers were willing to sell at lower prices during the year, which if we see, right, down 1,100 points. And then this year opens, so far, the buyers are willing to pay higher, but by 80 points. So it's up 1%, right? It's really not doing anything. So if this were to go red, that is a trouble, right? 6896. But so far it is green. So we can agree, in order to see price go from 10 to 100, we have to see an aggressive buyer that shows up, and then price, right? It'll start ticking up so long as that's true and that buyer's present. So when we look at any chart, if we go to Zoom this week, we can see what's happening this week. So at the open of the week, anytime it was above 86, 66, the buyer is more aggressive this trading week. And you'll see they go much higher. Now, if we go to a 15 minute, we can see where that weekly buyer was during the trading day. First 15 of the day, they are buying. The second 15, they're still here. The third 15, fourth, fifth, sixth, seventh, eighth, right, was flat. 9th, 10th, 11th, 12 15ers in a row, this weekly participant was buying and taking the offer. So we can see they're buying, and then they start selling and taking profit as we get into 17:30, that's later, later in the day. So a couple hours before the close. Now, if we go to the month, we can see the monthly buyer, right? The monthly buyer showed up here, 86.22 all month. It's going higher. So we saw this month, anytime above 86, it was going higher. This week, anytime above 86.66, it was going higher. And then during the trading day, anytime you're above the 60, the 30, the 15 opens, it had to be going up. And if you want to get good at seeing this, we can use this indicator called time frame continuity by TFO. And you'll see this. So what we can do is we can show on the chart when these all align. So the month, the week, the day, and the 60. You'll see here, month, week, day, 60. Anytime those align, we can have it either alert us with the labels, or we can also highlight when that's true. So if we go to like a 1 minute basis, you can see this buyer showed up here at the open and was there all day until right there at 95.71. And then this was the profit taking coming back down. So we can identify that for sure. So if we go to SPY today, we'll see a similar thing. So this is Monday's open. You can see they were in here all morning and then there's some consolidation, but they were still buying and they're still buying. Now, since we know this is true, whenever these all align, price has to be going up or down. What it tells us is everyone's buying or everyone's selling when we align it across 4 or more time frames being the same color. So what we want to do then is also ask, well, if we can identify where the buyers are at, and we can agree that that's true, because the only way price is above all those opens is if there's an aggressive buyer. If we can identify that's true, what will cause this to speed up? Because there's a specific thing that happens that speeds price up. And it looks like this in a quantitative way. It looks like this. We call it the PMG. And what it is a cluster of previous highs or lows. So pretty much it's a ton of previous range. And it can be found by looking for consecutive higher lows or lower highs. And some people, they will call this low resistance liquidity, which is just another name for the pivot machine gun. But this is a quantitative thing we can actually identify. So what we say is when price breaks the first reversal, it causes all previous long or short traders to be forced to exit. So we can think price is going up Monday, and then Tuesday it's going up, and then Wednesday it's going up, and then Thursday it's going up, and then Friday it was consolidating. The next week opens up, and then Monday breaks reversal. And then it takes the first pivot, which takes the next, and the next, and the next. And you can think of it kind of just like levels, right? Like if you have a ton of these levels lined up, you hit the first, which triggers the next, and the next, and the next. And what's happening is you have people stopping out of trades. Because if you bought it here on Monday, or here on Tuesday, or Wednesday, or Thursday, or Friday, you bought it. When this starts reversing, the guys on Friday get in trouble if they bought anything. Then the guys in Thursday get in trouble because they go into a losing trade. Then the guys on Wednesday and Tuesday and Monday, they all go into a losing position in one bar. So we take, 5 bars worth of people who bought and we put them all in a losing trade like this, like in 1 second. So when we go and look at stuff that moves quick, like Zoom this week, what caused the move to be fast? Well, it was multiple things. We already identified continuity. So we saw, right? All time frames were green. And this was the week all the way up to the yearly. All of them were green. So we know that it's going up for sure. And we pair that aggressive buyer with a pivot here, a pivot here, a pivot here, a pivot here. And we had the first pivot at 85.94 to cause the rest of them to break. So whenever you look at quick price moves, this is one of the ways that we can see it happen, where everything's green back through a previous range. So if we just go to any previous examples here, like over here, we can see it's closer to taking out, you can see 73.32 next week. And that would be then closer to taking out 73.67. And then if they're strong enough, we take this out and this out, and then this out, and then this, and this, and this, and this, and this. And you can see we have all these pivots. So each pivot we take out removes liquidity from this buyer. And you'll see it does not go instantly, but it does re-break and they gap. They take them all out. Now, when we look at this, it's very important we trade through these. We want to open lower and trade through the pivots. Because if we gap through them at the point of the gap, technically we've already taken all the pivots out. We have nothing to trade back through. So if we go to any really big gaps that we've seen, like silver, let's just look at silver today, right? Silver, you can see we had a reversal here, which took out 2 pivots, causing all this stuff. But notice it gaps into all-time highs. And yes, they did buy more. But technically, we had nothing to take out, right? If we look left, there's nothing to take out. So pivots are not necessary for price to move. However, we want to enter back through a previous range. Because when we go back through a range is when our risk is the least and the speed will be very fast. So you can see back in here, it gaps up, yes. But then we trade through this pivot, through this, then this, and they gap them all, but then they continue. So it's important, if we do have these pivots and we see it gap, so let's say we get an entry in here, and then once it gaps, what's key is we just need to stay out. We do not want to see price come back. Because if price comes back, then we start coming back through this previous range to stop out all of these guys. That's how we would think. So as long as it stays out, you're good to go. But we prefer to trade through pivots because they speed price up. So when we go to the really fast stuff, like Oklo has been a really fast one. When Oklo first started rallying, what caused it? Well, you're going to see we have all of this previous range back in here and left. And if we look, you'll see the week, month, quarter, they all started flipping green right around here in September. So anytime those were green, we're going back through all of this previous range that we can mark out. So you can see the weekly, the monthly were green here. That was full time frame continuity all through these guys. Then we get an inside bar, and then full time frame continuity where all of these are green was still true at the point of $9.15. So if we go and play through this, we will see the week, the month, the quarter was green here. At that point, all known participation groups are buying, and the yearly seller, since the year is very slightly red, the yearly seller's not there. So at that point, boom, right? We go and take everyone out. So we prefer to line it up with pivots. I just cannot get it over enough. Now, the other thing we like to do is cause this type of movement with what we call actionable signals. And actionable signals look like any of these reversal patterns on this sheet, as well as continuations and momentum continuation. These are all considered actionable signals. So we must pair all of these together using signals to cause the movement, pivot machine gun to speed price up, time frame continuity to know for sure if price is going up or down. So if we pair all these 3 things together, we can know for sure price is going up or down, price should speed up, and we have reason for price to move because at the point of the signals breaking, we have evidence it should move with a target. So when we look, the 2-2 reversal, ideally we pair it with a hammer, but you'll see we have the break of a signal and we have a target. And what we say is this: if a signal is in force, meaning anytime price is 1 penny above this break, that is when price is attempting to take out the target. No matter the time frame, that's what it's trying to do. But this bar must still be open. So if it's open and above its signal, we know the next place for price to go would be to take its target. And you can think of it like this. If you're driving your car, you get on the freeway and you start going towards Florida or wherever, imagine a place. You get on the freeway and you're going to Florida. If you don't turn around, will you get to Florida? Yes, you will. So if a signal is in force, we're going to Florida, right? Which would be your target. And this works for every single one of these. It just has to be above the break. If it is not above the break, it's a nothing. There is no signal. It's turned around. It was going to Florida. Now it's going to North Korea. We don't want anything to do with it. It must be above the signal break or below it. But it applies the same for all of these. So you're going to see the 2-2 reversal here. We have a signal. If it's below this, for sure, it's trying to take that out. We'll see it with the 3-2 reversal. We have a signal. In this case, we have no target. If we look at the 1 bar rev strat, the signal is actually a rejection. So coming back above this inside bar would be a signal to the target, and vice versa for the downside. If we go look at our inside bars like this, you see this would be the inside bar. We have a signal that breaks here, and we have the first target, which triggers the rest of these. We have momentum signals, which tend to not have a target. We have continuation signals, which will have a target. And we have inside bar reversals, which will have a signal and a target. So notice, we always have a signal, we always have a target, and we always have an invalidation. It has to be above or below the break of the signal and open. So when we go and look at something like Oklo, this inside bar on the week is the signal. We know the signal exists prior to the next week's bar opening, which means there's no guessing. Even though this is hindsight, this signal exists. Which signal is it? Well, if we go and look, it would be a potential 3, 1, and then a 2, right? It could be up or it could be down. So we have 3, 1, 2 down, which it could be. We have 3, 1, 2 down continuation, right? Or 3, 1, 2 up. So we can have outside, inside, up. The other thing that can happen with an inside bar is this. 1 bar rev strat, the inside bar, and then a 3 in the other direction. Or, opposite, the bearish 1 bar rev strat. We can have 2 bar rev strats. So a lot of things can happen after a scenario 1, which we have to be aware of. But in this case, we have a signal. We also have an important level. We have a signal and we also have an important level. We say it's important because an equilibrium is consolidating. And if you've ever seen on Twitter, like some people will trade like this. People will say, if I can only trade one setup, this is what I would trade. A consolidation, and then they go under. It reclaims the level. They're literally stratting. This is the strat. And then it goes to its target. It's like, what is this objectively? This is objectively inside bar that gets reclaimed. So the key level, the low of the inside bar, and then it reaches for its target, right? So he's teaching people the rev strat, but he doesn't actually know what the rev strat is. So this is inside bar. And since we know at the point of this inside bar, this month and this quarter, the buyers are more aggressive. This month and this quarter, we would prefer to be a buyer, especially anytime this is above 917, because this week, the monthly and quarterly buyer is buying. So we have right here, the second it's green at 915, we have a signal at 915. We have a target to 1115 and 1129. So if we go to like a 15-minute chart, what we'll see is this is, much like what he's looking for. Consolidation, takes the lows out and then goes the other way. But since it's objective, he might not be able to pick up on this consolidation because it's not sideways enough, but we can. This is last week's lows. Right here was when price came back above it, and then it's going the other way. So we can see, boom, this buyer shows up on Monday and then it's gone. And this was something we traded for thousands of percents. So in this case, we're pairing the signal with yearly, quarterly, monthly, weekly buyers. Because at the point, you can see of Tuesday, October 15th, the yearly buyer kicks in, and now anyone shorting this year must be a buyer. And it goes 60% in days. So pairing the signal back through a previous range with full time frame continuity. is what we want to do. And we have people asking about indicators. I've only used the indicators to show you how simple this can be. Instead of using indicators, what I would suggest is remove all indicators and then have 6 time frames up, or at least 4 at all times. The year, the quarter, the month. Oops. Let's see, apply all indicators. Let me fix this, sorry. So if you want to have a very clear picture of what the market's doing, we must look at least 4 timeframes at all times when analyzing any asset, which is key because most people do not do this. So when we look at Oklo, just for now, we can see on a yearly basis, it's a 1. Quarterly basis, it's a 1. This month, you can see it's 2 up, but it's a shooter. This week, it's going down. Today, it's going down. And then during the trading day, if we're going to short Oklo Monday, it's going down this week and today right as it hits 86.00. At the point of that, this week, today, and right now on the 60-minute, it's going down. So anyone that was buying this year or this quarter or this month, they're not buying this week, today, or right now. So what this allows us to do is when we line up our signals, so if we look here on the inside bar, it's a couple pennies higher than low day. You'll see we get inside bar actionable signal is what we call that. When this forms, before anything happens, what do we know to be true? It's going down today. This week is a shooter week to the downside. It also might be a 2-week inside bar that's breaking down, which would be like, 8 days? Yeah, so you can see on like a 6 or 7 day chart, inside bar down. So we have inside bar down here, 2 down on the day, inside on the 60-minute. So what does this tell us? Well, this week we'd prefer to be a seller if that stays red. If it flips green, then things are changing. Today, we prefer to be a seller unless that can change to green. At the point of this inside bar, if it'll let me do it, see if we can exit and go back in. And I promise we're getting to a conclusion here. I will show you how we can scan for all of this stuff, and we will scan live for, hopefully some good setups for tomorrow. And we do have a few questions. Go over the gold dump? Yeah, we will. I want to teach you this because then when we go look at it, you'll understand why, right? Most traders and most, financial education, they are so worried about what, I guess it's more like they're worried about what they can do and they're less worried about teaching other people to do it correctly. So we are much more focused on teaching you how to do this. And then we will go and take a look at stuff so you can start training your mind to see it this way. But you will see. So this week it's going down, today it's going down. When this goes inside bar signal, which will cause movement, what we know is unless it's back above 86.32, today the seller's more aggressive. So you could try and buy it. However, if this were to go 1 bar rev strat to the downside, 1-3, we would have more evidence for that to work because the yearly, quarterly, monthly buyer is not here this week. This seller is here. And if this works, right, it sets this shooter up for next month, which is another thing. But we'll see if we then go to a 1-minute time frame and we play this through. The signal is supposed to go instantly, which is key. Most traders are not teaching this when they teach the strat. The reason that's important to know is because at the break of this 60 signal, it should have went instantly. So when you see that it didn't, something's going on. Right? What's going on? Well, the daily and weekly seller, they're here. It broke up. The buyers tried to buy it right now on the 60, and they were not strong enough to do anything. The day is still red. If the 60 is red, the day is red, the week is red. Right now it's going down. Today it's going down. This week it's going down. So look at that. Boom. And our trades should go instantly. So anytime it was below 84.24, that was when that was kicking in. So if we go back to the 1 bar rev strat, you see 1-3. Anytime it's red, and back below this high, that's when it's kicking in. Boom. It's going to hit its target. So when we look at this, it kicked in at 84.24. And since we know the level at which this is supposed to occur, what we can do is we can be more aggressive with our stops. At worst, your stop would be 26 cents. At best, we would use like the spread plus a penny, maybe it's 10 cents. We short it, we stop out, we short it again, and we don't get stopped out. You would see in this one here. When we get a reshort, then we're good to go. And ideally, we go tighter stops because, especially when you're learning to trade this way, you're not going to be perfect right away. It's better to lose a little, 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 and then now you figure it out, make a lot, you make it all back, than it is to go trade options, trade big size with wide stops, lose it all, and then have to go work your job another couple months to save more money to start trying again. So it's better to trade small size, small stops, and the ones that work will go relatively instant. This took about 7 minutes to kick in. A lot of the very fast ones, the ones where this drops like 10% right away, it will kick in instantly. So we don't want to worry about that. But if we go to gold now, and we understand the 60-day week, right? That does matter. Why did gold drop today? Well, the 60-minute did this. You'll see an outside bar, broadening formation. They took the lows out, didn't go anywhere, so it's going the other way. And then you'll see, what did we have here? And I'll try and make it better for you. Simple strat numbers. So if we blow this up, and this is a question I want an answer to, so get ready to type your answer in the chat. And you can type it now if you already know it. But what did we have right here on gold? What is this? What do we call this? And I'm going to give you guys a minute. We had some questions in the chat. I will go over them shortly. Answer this question first, though. What do we call this? All right, so we got some good examples. Yes. Good. Most people are getting it correct. Yes. So we call this 3, 2, 2. Fun to say, fun to do. Now the question is, why do we call it that? Because a 3 is a broadening formation. And this matters because all price discovery occurs in broadening formations, which is why silver and gold are going so crazy, because their yearly broadening formations are getting bigger. But we'll see, this is 3, 2, 2. Now, like we said, the signals should go relatively instantly. It's like if we're correct, they're going to go. If they're not correct, right? We look at this. If we go to time frame continuity, which I'll just add it on here, time frame continuity by TFO. And for day traders, to answer your question, the month, the week, day, and 60 groups, that's what you want to be tracking for day trading. So we look at this month, this week, today, and right now, they are buying. 3, 2, 2 signal paired up with that buyer, we at least have these two pivots to take out, right? Going into all-time highs right here. Now that breaks, and you'll see they tap all-time highs, and then they start doing what? They come back in. So it broke, everyone's a buyer, boom. And it didn't go anywhere, right? It went up, just barely hit our target, and then didn't go anywhere. So what does this tell us? It tells us there is an unknown seller here, because at this point, the month, week, day, and 60 are all green, but price went up a little bit, starts coming back in. So what does that tell us? Unknown seller. So this seller, it could be Goldman Sachs that wants to dump, billions of gold shares, or whatever bank or hedge fund institution you want to, imagine it is. Could be that guy. It could be a ton of retail traders who are like, I'm going to short high of day on gold, right? We don't know. It's unknown. That's what it's called. And it's called that because we don't see them here, right? On all time frames, everything's green. So it's unknown. So at the point of that being true and stuff starting to come back, now, when this goes gray, this seller is starting to sell right now. And this can cause anyone that bought today, since the day is green, to go into a losing trade. So what we'll see then is this, as we let it play out. And we'll speed it up just so you can see. But we'll see it went 2 up and didn't go anywhere. So what's next? 2 down, right there. So anyone long against the morning lows, we take them out. You'll see they go down a little bit, come back, but then it re-breaks the signal and it was still true. So you'll see it goes, comes back up, re-breaks, and then boom, destroyed. So this unknown seller showed up, destroyed the weekly, daily, and 60 groups that were buying high of day, destroyed them, and they were unknown. Now, if we go to silver, the same exact thing happened. You'll see they go high of day, comes back in. So at the point of this being true, what do we know to be true about this bar? Well, this is an actionable signal. Which signal is it? It would be the 2 up, 2 down reversal, where we scan for this bar to trade below this signal with targets, right? So we can mark it out. This would be our entry trigger. This is our target 1. The other thing we'll notice is we are pairing it with a pivot machine gun to the downside, where when price breaks the first reversal, it causes all previous long traders to be forced to exit their position. It removes liquidity from whoever is selling, which causes price to speed up. So this signal, when it breaks, it should go instantly, which is what we want to see if we are correct, or relatively instantly. But you'll see it broke. The risk was 18 cents, and then it goes boom, $3. Then it does not come back to our entry trigger. Boom, takes out all the nearby pivot targets. So at the point of taking low a day, we don't know, right? It may continue, it may not, but that's a pretty good trade. Using the 2-2 paired with pivot machine gun, you can see the weekly, daily 60 groups take a loss. And those are the guys selling into low a day. They're taking their loss here. And so we have a great question here. How do you know how many highs or lows to target? Well, it's important to understand this. Statistically, is price more likely to go 0.01 or to go, let's say, like $100? So is price more likely to go 1 penny or $100? And this may, not be surprising, but price is overwhelmingly more likely to move 1 cent than $100. But when we know the pivot machine gun's true with signals, price is more likely to move big because we are trapping guys long at high of day. We are identifying an unknown seller showing up, and we are pairing that seller with pivots, which will remove liquidity from the seller. And by remove liquidity, I mean, if you are like, hey, I want to sell, 1 million shares of SLV today, price has to go lower if you decide to do that at the bid. You're like, market order, boom, I'm selling 1 million shares. So if you try to do that into stop orders, right? Anyone long here, anyone long here, anyone long here. If you try and do that into stop orders, you might sell 10,000 shares, price drops, like you can see, like $2 here. Drops $2. The buyers are forced to sell. They sell their shares. Maybe they sell 100,000. And you still have 90,000 shares to sell. So you continue selling, which causes more buyers to go underwater like this, and they sell. And then you have to sell more. And it causes price to go boom, 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 boom. So we need the pivots to be nearby. However, when we pair it with full time frame continuity, that's when we can see price expand. So if we go to things like SLV on the year, you'll see this. We have the inside year actionable signal. So it went 2 down, 1. At the point of this being true, what do we know? We have an inside bar hammer signal. Do we have pivots? Well, we got 1, 2, 3 pivots nearby, and then 4, 5, 6. So price is more likely to go to this than it is to go, from here all the way to here. Because it's more likely to move 1 penny than it is to move, $100. So short term, it's more likely you see price quickly move through this if we are correct. Long term, we'll have to see if those buyers are willing to pay higher prices. So when this signal breaks, we've agreed. If we go and look at the inside bar signal and what it does. 2, 1, 2. We have a signal break and we have a target. Anytime above the signal, we've agreed it is true Because if you get on the highway and you're going to Florida and you don't turn around, you're going to Florida. We know that. So if we let this play out, we'll just do it on a daily basis. You can see that it was true above 24.16, and it was a little fast here. And we'll just go to a daily. Why not? But you'll see this would be the trigger level. Anytime above that, it is true. So you're going to note price instantly goes, pretty good through these pivots. So you get an instant 10% winner, 14% at the highs. They back test it. And then we ask ourselves, is it still true, right? Are we still above that and still going to Florida or not? They back test it. You'll see they form a hammer actionable signal on the day. Then the condition's still true. Boom. So you can see this is a yearly signal. So when we say instantaneous, we mean relative. So if you're on an hourly chart, it might go like that minute. If you're on a yearly signal, it might be that month or that quarter because it's a much bigger group. But if we go to like a yearly chart, yeah, we're going to talk about options premiums shortly, but it's important to understand the actual mechanics of how does price work? Why does price move? How are we going to get into there and do that? But you can see, so short term, it's much more likely that it's going to do this, go 35%. And then it's up to these yearly buyers. Are they willing to buy more? And we want to trigger more pivots. So you can see they dance around, right? They're stopping some guys out. This is still true if we're above 23.90. They get back above the pivots. There's the next one. Then you can see they start coming back. So when we run out of the pivots nearby, we're going to stop people out, and then we're going to keep going. As you can see here, they stop some guys out. They're still green on the year. They get above this, so that's another pivot. Then they get above this one. You'll see 36.39. And as long as they're above that, 48.35, boom. You'll see some profit taking, but then they get above that. And now anyone short silver, AKA the banks, squeeze. Banks are screwed, right? Gold did the same thing with the inside year here. You'll see at the point of this inside break, there's only two pivots to go after, but it breaks and they go instantly. Now, if we go to options specifically, with options, what's important is understanding in the moneyness, right? And what that means is this. If we have price, let's say price looks like this, right? So we have our pivots and it breaks. We have our signal. With the nearby pivots, we can make an expectation. We can say, okay, if this works here at, $500, and this is a bad example because we're in negative territory. Let me go to, we'll just do paint. Make it easy. So let's just say, right, we have price and it looks like this. We can make the expectation and we can analyze the price and have an idea of what may occur based on all these pivots here, which we're just going to draw out randomly. So let's say the break of this is at $10. The target up in here is at 15. When you're trading options, you have to understand you're buying a contract. And what the contract says, the agreement between you and the person selling it to you, the contract says, I will sell these shares to you at a certain price before this date or by this date. So let's just say this is a daily chart. So we'll just say it's 1 day. So we'd like to see this move happen probably within the trading week. It should really happen in 1 day, ideally, but let's just say within the week. So we're going to give ourselves 1 week to be correct on this. So if we were to open up an options chain, let's just go any random one. Let's go ALB. So if we go to the weekly's ALB, we'd be looking at this Friday's expiration. And that would be, you can see 13th of February would not quite be this Friday. There it is, January 30th. Sorry about that. But January 30th, so there it is. So when we look at this, we're paying $6 a share for the right to buy 100 shares at $190, which is the strike of this call. So our break even would be $190 plus $6 a share. Because again, we're paying $6 per share. So by the end of the week, by Friday, we need to be above 196 to make any money. So if we go here, let's say the weekly expiration, let's say we're looking at the 12.5 call. So that strike would be right here, 12.5. We can understand, is that option priced correctly? So if we buy that strike at $10, that call, let's say it's worth, 25 cents, which is a very big, it's a possibility depending on volatility. Let's say we're paying 25 cents a share for the 12.5 call that expires in 1 week or Friday. So by Friday, if we add these together, by Friday, we need to be at 12.75. So we need to see prices be 0.25 above the price we paid for this call, or above the strike of this call, my bad. So this would be our break even on the option contract. Then every dollar, or you could say every penny above 12.75, we will make $1 by Friday. So if we see it go to 15 like we expect, since this is our break-even price, the contract will go from 25 cents and it will be worth $2.5. So we pay $25, we get $250 back if we're at 15 on Friday's close, or at Friday's close. So when we look at this, we could say, well, wow, if I spend $25, I could make $250 if we finish off all those pivots that are nearby. And that's how we need to think about it. So if we go to Zoom, just as an example, and this is not an example we are just pulling out of nowhere. I want to prove this to you guys. So this was something we talked about last Friday, actually. And if we go to Zoom, Sarah was discussing this from the morning session, 13 minutes prior to market open. Check out Zoom. Your yearly trigger should be happening soon, Alex. So you can see pivot, 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 pivot. So it's going to go to 91.43 if we're correct, and then maybe 92.80, which is an additional target. So it's at 85. We're looking for 91, maybe 93. So the question becomes, is Zoom pricing that all in or not? So we can mark out all the pivot targets, 91.43. At the open, our question is, if we're going to buy calls, we want to be below our last targets. So this would be 91.43. So we'd want like the 90 call, the 89 call, the 88 call. What were those trading at the open? So let's see what the 91 call was trading at the open. So at the open, the 91 call was 90 cents. So if we go to 92, we would be pretty much at our break even, because we take 91 call, we pay 90 cents, so we add it together. That's 91.90. That's our break even price. So price would have to be above 92 by the end of the trading week for us to make any money. Now, is that something that can happen? Well, if we see price break and go instantly, since we know it's supposed to go instantly, it will be at 92 likely in the first day or two of the week. So even though we're not going to be deep in the money on Monday or Tuesday, we will be at our break-even price before expiration, which means we will have to be making money. So if we look at this on a 60-minute basis, end of the first 60 minute of the day, we are at 92, give or take, 91.50. So let's see what this was trading at. It opened like 90 cents, right, give or take. Second 60 of the day, it's at $3. So the 91 call, when Zoom is trading at 91.26, is worth 3 because of how fast it moved. So it's either going to be pricing in, this move up to 92, which this one was, or you're going to see where you can buy it, at the open, and maybe this call would have been 25 cents. So if we go to 92, it could be up 400% at the last target here, and maybe it goes even further. So the goal always is, can we create a winning position by timing the reversal? In this case, 3, 2, 2, fun to say, fun to do. Is that not true, right? They're going up. With full time frame continuity, this occurred above the month open with all these pivots to come back through. And then ideally, we can look at those options and we could say, well, if it's a buck, maybe $1.50 to get this, it's probably going to be at 92 before the end of the week, maybe before the end of the day. So this should be worth a lot more. Now, if you have any questions about this, we will take them, but we can show you some other examples, right? Like Cisco. While I wait and see if those questions start coming in. So if we look at Cisco, it did gap, but anytime it is above 76.47, we have. Do we have the recipe, right? Well, we have the inside bar signal. 2 down, 1, 2 up signal. Anytime it's above 75, we're going to Florida. We know that. Where's Florida? Well, pivot, 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 pivot. And then maybe, right? Pivot, pivot, right? It'd be way up there. So maybe by the end of the trading week, we could be at 79 or higher. So if we were to look at Cisco options, Cisco 78 calls are 50 cents. So if we go to 79, the 78 calls at 50 cents, we have a break even of 78.50. So at 79.15, we would be, 60 cents above our break even. So we would double our money by buying the 78 call at the current price, if this is correct. Anytime it's above 76.47, that would be true. Now, the additional thing we can do is instead of just randomly buying it, line up a 60-minute signal. So maybe this goes inside bar up at the open tomorrow. We can buy it right then and there with a signal, with a tighter stop. Now, if we go to the chat, let's see what you guys got. So YouTube chat, you got nothing? Discord chat, you got nothing? Am I just the best teacher in the world, or are you guys just quiet? Someone correct me. Let me get some water. Give me 1 sec here, guys. And girls, right? There's a few. All right, I got in Cisco today. Yeah, hopefully it opens up tomorrow. So the only thing you have to be aware of is when you are trading during the week, right? This is the thing, traders, they really struggle with this because they don't want it to be true, but it is. And this is why most people fail. It's because this is true. I'll show you right now. So the reason most people fail is because things change. The best looking chart turns into the worst looking chart in 1 bar. And what I mean by that is this. We've agreed signals cause price movement. So when we look at SPY, no one would say this chart looks good, right? If you just are support and resistance guy, you're like, wow, these guys are getting wrecked. Now, as a stratter, we do not draw our lines horizontally as they do not account for time. We will broaden our lines to account for time. There's your broadening formation. So when we look at this, we can see the big broadening range in here, and you can see the smaller ones that already happened, right? Like all of this fun stuff. You'll see a very, very tight one in here that broke down. But we look at this, that is the worst looking chart in the world. Now, in 1 bar, that now looks really freaking good. That's a hammer at the bottom of the broadening formation. And if you know anything about broadening formations, you know this signal is making it more likely to go to the other side of this range, which this is something, traders don't know, but they should know, because this is one of the best parts about trading. This signal increases the odds of that working. So in 1 bar, changes the whole entire chart. This is what makes trading hard, but it's also what makes it really fun because you can time that. So what makes it hard with trading is when we look at this, at the point of continuity, let's use my indicator here. 1.3 thousand likes on the indicator, which is awesome. So if we just look at the 60 minute, the day, the week, and month, why does this happen? Even though we know time frame continuity was down as it went into the close. I really should have this saved as a layout. I apologize. So again, at the time of this being true, no one would say that this is a good looking chart. Like this, right? Literally every time frame, 60-day, week, and month is red. So to us, this looks like a bad chart, right? But in 1 hour with the hammer 60 forming, now what this is showing us is potentially these sellers are done selling intraday. And there's profit taking at the close. At least that's what we see. The next bar opens and the buyer shows up. 60-day, week, boom. Changes everything in one overnight session, right? This happens because each day is a new open. Each 60 is a new open. And these opens are responsible for today and right now. And that is the most important part of price, is today and right now. Because if you are buying today, you better have the market going up right now, or else you're going to buy, you're going to instantly go into a losing trade, and it might go further against you. If you're buying right now, you want it to be going up today and right now, ideally. Because if it's going up today and right now, it's going up. Even if it's going down this month, this quarter, this week, and this year. Today and right now, it's going up. So this is what makes it harder, because 2 of the 4 major time frames, the 60 and the day, reset every 60 minutes. You get the new 60, and every day they both reset. So the best or worst looking chart can change like that in one daily bar or 160 bar like this. And you can see what happens. They blow out all the shorts. And again, now the shorts, they're looking at this. They're like, wow, I don't want to short that. But in one bar, that 2-2 reversal, that's now the best looking short. And now they're like, I don't want to buy that, right? That looks terrible. Goes inside bar. In one bar with the hammer signal, it now turns into a long right there. Boom. Today and right now. So you can see that matters. Each 60 matters. And this is what makes trading hard, but it's what also makes it fun. So this is very important to understand when we're talking big time frames. And I hope this answers your question on continuity. Yeah, USAR and MP. Let's see. So USAR, right? Would anyone say this is a bad looking chart? Heck no. But you have to understand, the first people to sell are not the, institutional sellers. Those guys normally don't sell until they're the last guys to sell. The first people to sell are the people selling right now. They're like, how about USAR at 14? Now it's at 20. This is really expensive, right? I'm going to sell at 21 or whatever it is. So this is the best looking chart you're going to see. Then inside bar actionable signal, 2 up, 1. So now everyone is long. Right? So we may have a crowded long trade, and then we have an inside bar signal. When it breaks inside bar down, boom. The 60 guys, they sold right then and there below this. 2037. Where are they going? To Florida, right? 1979 would be the pivot target for USAR. What did that do? The day flipped red. So right now and today they're selling. Today it's not going up. Right now it's not going up. Then you'll see the 60 goes 2 down again. Right now and today, they are still selling anytime they're below 1913. Boom. So you can see the inside signal gives control to the sellers as a PMG like this. And if you want to see the broadening formation, you can see the broadening formation here. Inside bar restarts price discovery. Goes down, hammer, signal, boom, goes up, inside signal, restarts price discovery, goes down. Down they go. So you can see how that works. And this is not, this is something I've been working on, but you can see just how objective it is in identifying that, in this case, before the break occurs. still working on this, but you can see it's doing what we're supposed to. So the signal, again, caused the movement. And if we go to right now, so this week, the seller's more aggressive. However, the weekly opens at 30.62, so that could change. At the end of the trading day, there was some profit taking, but you have an inside signal for tomorrow. So either side of this 60-minute could get our attention, either for a 1-3, which happens at the open a lot, or a 2-1-2 reversal back through a range of guys who are short, with the weekly open as another level that we can mark out right there. So this would still be pivot machine gun. You got 24% of range if the buyers come back. Now, if we look at the day, to start off the week, it's closer to daily reversal down. So that 60 either gives controls to the buyer trying to go back up tomorrow with the 60 and day green, or, and it would be preferred, we get the 60 signal down with the day and the week and the 60 red, where at that point, we have no evidence of this. You can see this yearly buyer or monthly buyer. They're buying all month, yes. But at the point of this reversing tomorrow down, we would have no evidence. If the day is red, the 60 is red, the week is red, that monthly buyer is gone. And that does matter. So we'll have to see. If we go to materials, it looks the same way. So what happened in materials sector today? Well, they gapped them up and then they sold it all. When did they do it? Right, the second 60 of the day, as well as you can see in here and here and here. So if we go to our scanner, I'll help you with the broad information in one sec, but I can show you. So if we go to the scanner, we look at sectors, we look on the 60. Materials, as far as the trends were concerned all day, you can see they tried to buy some at 11:30. They went in and they just started buying. This is showing us the number of uptrends. 12:30, they reversed every single one of those, starting right at the open at 12:32. And here they reversed half of those. So you see 60% reversed up, half reversed back down. Then as the close went down, there was some buying, some selling. So they might be consolidating some positions into different materials names, which, if you wanted to see that, you could look at materials sector and we could go here and we could say, okay, well, who's still going up? All right, these guys were stronger. There's still some buying in these guys today. Who's going down the most? CRML, MP, HYMC, Alcoa, FCX. So these are all the ones everyone's been talking about. All right, so these guys are getting sold off, and these nobodies that I've never heard of, these guys are flat or up slightly. So we go to ESI. While the whole materials market's reversing down, they're buying this one. So they're selling some of the other ones, they're buying some of this. And you can see all known participants were a buyer today. You see right at the open, right there is when they started buying, and they're going up. PPG is paint. Let's see. PPG. Is paint a material? I don't know. I think so. The sectors in here, we're working on an update to this, but that answers your materials problem, right? These guys all got in trouble, and we're going to see, do they confirm the downside, or do the buyers come back tomorrow? So if we go to like CRML, we had this drawn from last week, the broad information. They gap it up, and look at one gaps up, it goes red there. Where's it going? Well, Florida brings you back all the way through this range. If we're going to Florida, look at that, all these pivots. So they took out a lot in the morning, and then here was the 2 up, 2 down 60-minute, boom, right into the close or the end of the day. So I've had success sticking to 1 or 2 signals. I like the failed 2s and the 1s. What are your favorites if you had to pick a few? Well, there's really only a few specific things that we look for. So at the end of the day, everything comes back to looking like the same thing, which is why you will see traders who are using our techniques that we've figured out through the universal truths. They will do good even if they're not using the strat. So those things are, if we get a 3, anytime we're back above the low or back below these highs, it's going the other way. So if we tick down and start coming in, it's going like 3-3. If we have a mother bar like this, where we are stuck within this range, we can time signals with this broadening formation to cause that range to break as an inside bar. You can see consolidation that is breaking higher on this side of the chart. We can also use signals to reclaim the mother bar's highs, mother bar's lows. So this signal caused us to go back through this range, reclaiming this. This signal, this hammer, caused us to reject the bottom of that range and take out the highs. So we can look for this, and we can look for reclaiming of threes. The other thing we look for, we've already discussed, but it would be the pivot machine gun. Right? Where the signal triggers one, which triggers the next, triggers the next, triggers the next, triggers the next. So these are really the main things we're looking for, and then it's a matter of how are you going to get in there. So if we see inside bar, right, by going on the lower time frame, you might see this better. But we'll see. This is a consolidation in here. So it goes to the highs and then 2 up, 2 down reversal at 2051 as a pivot machine gun through all these guys. So on a bigger time frame, what's happening is exactly this, right? We went inside, then we went up, we started coming back in and went like this, boom. So we went sideways, went up, reversal, destroyed. And it goes instantly, right? We're using tight stops, we get 7%. At worst, you know, maybe we're risking 1% to make 7 for the initial entry. At the time of, you know, end of day, that entry risking 1% is down 14%. So that's a beautiful thing. But that's one of the things we do. The other thing would be like natural gas. If you've seen natural gas, it's why we look for these things. We discussed it in one of our videos. I can't find it, sadly. I was trying to find it. I think it was one of our weekend vids or nightly vids. But we saw natural gas do this. 2 down, 2 up on the week as a pivot machine gun. There's all your pivots. So if it's above 3, 4, 5, is it going to Florida? Right? $4.40? It is. This move is 27%. So maybe you risk a couple percent to make 27. If that works, what's happening? We will see outside bar goes down and goes green here. Anytime this is green, it is going 49%, 47% higher. And then it keeps going 100% at the highs. Beautiful. So you can see this would be an example of 3, 3. And what that looks like on a lower time frame is like this. You get a broadening formation that plays out. So we can scan for the 3. We can scan for the inside bar. And then we can play off of those. So these are, and the pivot machine gun, we do not have a scan built for it yet, but we do have that in the works as well. So those are really the only 3 things you can do outside of just using the signals with, you know, the strongest names in the market. The reclaim indicator, it's really simple. So we actually know where price is going, unlike some traders. And what I mean by that is we can quantitatively identify where the target is prior to the move. So if we go to magnitude of price discovery, this is one of my indicators. And you can see barely anyone's using this because they don't understand how it works. So we can use this. And if we turn it up to like, 100, what we can see is why did price move so much higher? Well, first off, we have all the pivots lined up, which is a good thing. Secondly, you can see we reclaimed here on the daily anytime above 31 or 311.54 with a target of 12%. So the big moves, right? If this is going 80%, it has to go 12% first. So we do not have to be the guy that buys the perfect bottom. That's fine. What we will then see is when this kicks in, we are now back above this, which gives us a known magnitude 70 or 60% higher. And at the time of full time frame continuity being true, anytime the 60-day, week, and month are green, at the time of that being true, we have that daily target. So if we zoom back out and we just show you, we'll go like this, just so we can see this across time frames, so you can see the big reclaims going on. And all this reclaim indicator is doing is what we should be doing with our eyes. but it helps new traders to see what we see. So this indicator is not the trick. The trick is continuity plus this plus signals at the same time. I'm working on the signals aspect of it. But if we just blow this back up on the 60, we will note, where does it occur? So where does this go all green? Anytime here, Tuesday, January 20th. So let's just say the level is, somewhere around here, 3.68. Anytime we're above that and the 60-day and week are green, for sure it's going up. Quantitatively, it must be going up. And you cannot refute that. I will give you $10,000 to refute that, and you can't. Because at the time of price being above the 60-day, week, month opens, this month, this week, today, and right now it's going up. That has to be true. The only thing you could say is maybe it turns around at that point. So when that's true, if we zoom out, since we know for sure price is going up, as long as that for sureness stays true, so continuity stays the same, which it's, again, subject to change every day and every 60 minutes if we're a day trader. We have 41% to go at this point. At the point of full time frame continuity, we have 46% of magnitude. And that is true anytime we're above 3.21. So you can see they are racing to our targets, racing, because it had to be going up this month, this week, today, and right now. It had to be going up. So therefore, it's going to go take the targets out, because if it's going due south, and if we keep going south, we're going to hit Florida. We're going to Florida, right? Unless you reverse, we're going to Florida. So that matters, because when we get to the really big stuff, it really, really matters. It really matters. So let me show you. We called gold and silver using specifically this knowledge. We also called things like Palantir, Robinhood, all those really amazing buys using this knowledge. So we look at gold and silver. If we switch this to our investing timeframes, which is the week, the month, the quarter, the year, anytime these all align, everyone that is investing, long-term buying, has to be to the upside. And people would say long-term institutional order flow, right? Or whatever you want to say. But the yearly guy, the quarterly guy, the monthly guy, weekly guy, they're all buying. So if we go to gold, we don't have to go all the way down to the week. But if we go to gold, at the time of that yearly inside bar breaking at 193, when we posted it on Twitter, and we identified this condition was true. I don't know if Twitter's going to give me it or not. Yep, here. We identified the condition was true. Over 193, where are we going? Up. We know that for sure, right? This is not hindsight. We are giving it to you in real time. Anytime this is all green, it has to be going higher. The other thing that has to be happening is what we call range expansion, which is hard to see on a yearly chart like this, but it's a broadening formation that's getting bigger. So when we look at this, this was the broadening range. So if we go to gold, did we draw that out? Objectively, it is the broadening range. And if you struggle with seeing these, you just have to know it's a higher time frame outside bar. So if we look at decade candles, which I have not posted yet, but if we look at decade candles and we look at a 10-year basis on gold, see how it's just a breakout of the previous 10 years? That's what that tells us, which tells us we have 10 years of uptrend until 2029, supposedly, right? Whenever that 10-year candle closes. And if you open it at different times, the chart, so if we go 1995 instead, the chart will look different, which is why we use multiple time frame analysis, right? If we open this yearly candle at different times, it will just look completely different. If we go to a 5-year candle, now it's an inside bar signal to the upside. So understanding price action expands, these big bars get bigger. That's how we knew gold was going to go. And then silver was the same thing. So when we look at silver, what we can see is any time it was above these yearly opens, this year, where is it going? $48.53 anytime the year is green. Because at the point of all those lower time frames being green with the year, it has to be going up. So when we go specifically down in here, we can see each week, is it going up or not? So we can see the year, right? This is way back when, 2025 in May. June, it's going up this week. and this quarter, this year, this month. And then slight profit taking. Is it still going up this quarter, this year, this month? It is. So this is just profit taking. And this is how we time entries. They sell on a weekly basis, but the month, quarter, year are still going up. So that's profit taking. You see right here. 322, boom, you're in. That's a nice one. They're going to Florida. Then you'll see profit taking. Did it change the quarter, the month, the year? No, it did not. This is profit taking. And then you're in. Boom. You'll see the outside hammer signal to cause this. Momentum hammer signal to cause it. You're in. And you'll see each week they're still going up, still buying, still buying, still buying, still buying, still buying, still buying, still buying. Up, reversal. This week they're selling. Is it profit taking? Yes, it's still profit taking. Inside bar signal, they go back up. Did this go break down? It did. Did it go anywhere? It did not. So there's still a buyer here. Who's the buyer? The yearly, quarterly, monthly guy. So this signal, shooter week, broke down. It's not an unknown buyer. We know the buyer is here this quarter, this month, this year. So this is not unknown buyer. We can actually reject that signal. We can play against it. And then you're in. Boom. And then inside signal. Are they still buying? Yes. You're in. Right? Up they go. And they just keep going. So when you look at it objectively, this allows you to time your signals into very aggressive buying. And when we go to things that have a target, so if we go to uranium, where's uranium going if the year is green? Anytime above 42 bucks. 134. Right? That's true. Where's ARC going if this is green? Potentially, right? 160, but for now it's still 4-year inside bar consolidation. These 4 years inside of this year. So it's still consolidating on a 4-year basis. What if we go to like materials? How did the materials get moving? Well, the monthly buyer, the quarterly, so monthly, weekly buyers show up here. The quarterly is pretty much flat. The yearly buyer was in there all last year from May. So the yearly buyer was in here just accumulating, right? What'd they do this month? Hammer quarter actionable signal above 46.24. It's going to Florida. Do we have full evidence? We do. What'd they do this year? Hammer year above 46.44. Do we have full evidence? We do. So where was that going? Anytime all those time frames aligned down in here, it had to be going to all-time highs. And then it goes a little further. So we'll see, do they have more to buy this year? But it's always that previous range that breaks with every known participant being a buyer. Anytime all of these are green, it has to be going up for sure. So this is profit taking, this is profit taking, this is profit taking. The yearly buyer's just buying. This is profit taking here. They're just buying. This is profit taking as far as we know. Now, it's important to understand profit taking turns into selling. So the first guys to sell are the profit takers. The next guys would be like the weekly guys, and then the monthly guys, and then the quarterly, the yearly guys. So things can change, but it's just much more difficult, to get materials to drop 15% than it is to go down 0.5% and then just keep going up. So it's important to understand profit taking does not mean there's no risk, right? If price is going down, it's going down. You still have risk, but the odds are price will go back in your favor, and we should play for that. Do you trade futures with this? You can. Was the day green here? It was. That moved 100 points. Inside bar. Is this a 1-bar rev strat? Inside bar and then go gap down buy? Yep. So if we go to the strat dictionary, the 1-3 most often occurs on gaps. The 1-3 most often occurs on gaps. The 1-3 most often occurs on gaps. When does the 1-3 happen? 1, gap down, 3. So trigger, it's going to Florida. Magnitude. 1, gap down, goes green. Can you make money doing this? Yes, absolutely. And at the point of that happening, was every known participant a buyer at the open on Sunday's trading? They were. You could buy it right then and there, low of day. Right there. Right? You could literally buy low of day. And your risk, right? Maybe you're risking 10 points at worst. Ideally, you just buy it right at the open, risk low a day for 4 points, and you're in. Now, if you missed it, do we know what profit taking looks like? Yes, we do. If we change this to like a 60, we can see when the intraday guys are getting stopped out and trapped in short positions. So when should we be buying? Well, after they sell, then we're going to buy it because they were too weak to hold on to that stuff, right? And then short term, profit taking, profit taking, profit taking. So we can wait for them to stop people out and then buy it with the yearly, quarterly, monthly, weekly, daily, 60-minute intraday participation groups. Everyone's buying, and up they go. Edge over broadening formation, should you exercise caution? Yes. However, broadening formations only are true when you kick into full time frame continuity as far as like, is price for sure going? It's like, let me show you this. Defense sector. So we got magnitude turned on and we have continuity that we have on as well. So defense, at the time of price being above $24, it is going to 73 if we have a period of full time frame continuity, which would look like, for an investor time frame, the week, month, quarter, and year being green. We have a 3-2-2 fund to say, fund to do. It's also paired up with, you can see inside bar being reclaimed. So like we've already discussed with inside bars, one way we can play them, right, is when they go stuck in the middle, we can go boom, boom, reclaiming this low and this high, as well as the inside bars high, the inside bars lows. So we know if it comes back above this, Florida, right, this is where price is going. We're going to Florida. So here it is. Where's it going to go? Well, pivot, 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 pivot. There's your pivot machine gun. Should it go this month? For sure. Very fast. Absolutely. At the time of the signal break, all known participation groups are buying. The year, the quarter, the month, the week, they were all buyers. Where are they going? 73. Are they more likely to go to 40 than 73? Yes, because statistically, price is overwhelmingly more likely to move 1 penny than $100. So short term, we have these guys to help us out, 30%. Long term, if this short term signal works, we have the much bigger targets. So long as continuity stays true, where all of these timeframes are green, price must be going higher. So you can see as we let this play out, timing the 3-2-2, fund to say, fund to do, with a pivot machine gun, with all known participation groups buying, price has to be going to 72 for certain. There's no other way this can happen. And you might say, Alex, well, the month was red there. Yeah, at the time of the month being red, it was not going to the target. Anytime the month's green, this month, it is trying to do that. So a red month just shows you profit taking. This is actually, if you're going to time ads, you would like to time it during a red month. You can use a 60 or daily group reversal to change the month into everyone buying. So again, like we've discussed, when we go to a shorter time frame, profit taking looks like all three of these time frames are green and this is red. So this is profit taking, then we buy it. Profit taking, signal, buy it, right? And some of them will work, some of them won't work. So if you add, you want to just keep a stop on it. You see profit taking in here. In this case, the monthly went slightly red, but then it's right back into it. So you can see the whole way up, profit taking, they buy, profit taking, they buy, profit taking, they buy. That's all that's going on. Now, if we go back to the month, you're going to see at the point of all of our pivots being taken, this full time frame continuity changed. The month, quarter, week went red. So the yearly group that was buying, they're taking profit or they're just done buying for now. The new month opens, goes green anytime above this, and that yearly group's back if it is green. So let's see what happens. We have these guys who are selling. Anytime it's green here, all known participants are buying and these guys are selling or they sold short. We go 2-2 reversal. Boom. All shorts are underwater in a losing trade. Price expands higher, right? Right when this was green, 64.78. So you can see they sold and then they got countered. So when we're timing entries, what we want to do is we want to know what these big time frames are doing. If we know we could reverse on the month, if that's the monthly open way down here, can you take this hammer signal on the 60-minute into a 60-minute pivot machine gun through all of this stuff, right? To cause price to speed up and instantly go in a winning trade, maybe make a couple 100% on options? Absolutely. Could we time this shooter signal back to the downside if we want? Sure. Can we time this signal here after a new low? Where you're going to see we have a level of reclaim with a target of $84 and all known buyers buying, we can time that. Can we time this inside signal here to try and add to it if we'd like? Absolutely. And then we get some chopping them up, and then they finally break and go. So it just matters what time frame are you going to choose, and can you align your 60-minute pivot machine gun and your hammer actionable signal or whatever signal you want to trade? Can you align the 60-minute into the monthly setups, into the weekly setups, the quarterly setups? Because those are the big moves. So one thing we look for, or one of the few things we look for, right? We look for the threes, we look for the mother bars and the inside bars, as well as 2-2 reversals. So MU, outside year. If we're going to time a signal, this 3-2 year, what is it showing us? Aggressive buying to the upside. It's showing us price discovery. What? Here it is. Well, I know where it is, so I'm just going to have to do it the slow way. We know eventually expansion occurs when we get outside of a broadening formation. So if we have a 3, that's a broadening formation for sure. New lows and new highs. And expansion occurs anytime above 298.83 MU. So that's true. If we're going to time a 60-minute, pivot machine gun or whatever signal we want, shouldn't we do it into that? Right? If we have reason to believe it should be going up this year, absolutely. So what we can do is we can find a 3, price reclaims it. Where's it going to go? Florida, right? And if you're wondering, yes, there's your reclaim level. Now in this case, it's not showing the proper target up in here, but this is the reclaim level, which gives you a target, right? And then the signal, this inside bar, is what causes the move. And in this case, it was a 2-hour consolidation. It broke here, goes up into all-time highs instantly, right? 5%. So we want to pair these pivot machine guns. We want to pair these gap down buy, the gap up sell, the inside bars, all the fun stuff we know about that you can find and learn more about just here. Pair all of these across time frames with full time frame continuity, because at the point of that being true, we have no reason to believe it will fail. And if you look at the options and you ask yourself, how far in the money, when does it have to be in the money? You start looking at it through those, that lens, you can see the move that's trying to come just based on, what's price doing. Like if we look at this 60 on SPY, most traders would say this came out of nowhere. We would say this is a pivot machine gun with a 2-2 reversal in force above 688.11, which caused SPY to go quickly. Simple enough. Zoom is zooming. Zoom is zooming. Is it gapping after hours? Oh yeah, it is. So when we look at Zoom, what do we know? There's an aggressive buyer this week. Now, how much continuity do we have? What do we know to be true about Zoom? 312. Is that something we look for? Well, 312. What is this called? Inside bar continuation. Cool. Is this a broadening formation? It is. So we can mark out the levels. We want to stay above that or else we might get in trouble. This year it's going up. Where is it going on a yearly basis or a much bigger time frame? Well, the reclaim was all-time lows. So technically magnitude's 587. Well, remember, price is more likely to go a penny than $100. So when we look at this, it moved quick through the weekly pivots. Now it's up to these buyers. Do they stick around or do we see profit taking? The next nearby targets would be 124, 126. And the current broadening range might look something like this. So we need to stay up here. If it stays up here around 95, you're good. If it starts coming back below that, you might get in trouble. Market price on options, yes. And for people that are asking about intraday trading, everything I've already discussed applies. You just got to be aware of when your higher time frames are inside, like this. Look at this, chop, mess, destroyed, right? That is an inside 63.1. So you will notice Every single one of the reversals occurs with a 2 or a 3. We are not trading during scenario 1. That is a losing trade. So if you trade during a scenario 1, you're going to get chopped up, lose your money, get mad at us. It doesn't work. It doesn't work. And that's your fault, not ours. Because when this breaks, anytime it's below that, it did have a target and it did go lower. But if you're in here on a 15-minute basis, you're like, I bought it. It didn't work. I sold it. It didn't work. I bought it. It didn't work. I'm done. Boom. There it goes. Strat doesn't work. You're doing it incorrectly. We always start at the month, the week, day 60. We start top to bottom. So if you're in here and you're like, I want to trade the 15-minute. Okay, what's the 60 look like? Nope. You got to wait. But you'll then see we had a 2-2, 2 up, 2 down, 5-minute that broke pivot, pivot, pivot as a pivot machine gun. Pivots all around, right? So you can see all these nearby pivots. Price should go quickly through this, which is why we can have a tight stop of the spread. So if the spread on the futures is 2 points, your stop is 2.25 points. The spread plus a penny. So you have a 2-point stop. Maybe it's slightly more or slightly less depending on how you're trading or what you're trading. It could be options, right? But it goes instantly, boom, you're in the trade. Then breaks the next target, gets out. We can then stick around because we've now created a giant winning trade, right? 9 points intraday, and you're good to go. And again, you have to wait for this inside 60 to close out. Although it may be enticing and you're like, I really want to trade that. It's going to be much trickier to trade that versus waiting for the 2, right? You don't need to trade these double inside bars. Trade the 2 here. You don't need to trade the triple inside here. Trade it when it becomes 2 here. That's when the trend's actually happening. So it's important to know that. But intraday trading is all about, can you look at the day and figure out what the day is doing? Where is the magnitude, right? For the 1-3. And then can you get in there on a lower time frame, like a 5-minute? Once it makes these new lows, here's your hammer. Can you get it there? Ideally, right? And if you miss that, can you get it here on this 5-er? Can you get it here with this hammer pivot machine gun on the 5-minute? Can you get it here with this rev strat on the 5-minute and this 3 on the 5-minute? Always looking for red bars and then going for it. It's really the most key thing with intraday. Like if we're trying to short Intel, you got to let it go up first and then the signal, boom, destroyed. Like today. I added to my short today. I sadly didn't get the add here, but it went up here and I was like, all right, I'll add to it here. Boom, down they go. Now it didn't really go that far, but I'm risking house money. So I'm willing to risk money and see if Intel's got more to go because we shorted it last week. Sorry, I'm getting some messages. Regarding futures, what adjustments should we make when the quarterly contracts change? Trade the more liquid one. When trading options, how far out of the money will you go? Does it depend on setup? Yes. We've just shown you why is price going to move fast and instantly, and where is it going to go? So if we have a setup and the magnitude's just 5%, it's going to be more tricky to go deep out of the money versus if you have a setup, the magnitude's stock's going to double. Yeah, you can go out of the money as much as you want. But it is riskier. So like if we go to BBAI, a lot of traders want to buy this one. Now at the point of right now, it's closer to pivots down, right? So short term, it's more likely to take these nearby pivots out than it is to take out the other side of last quarter's range at 9. So anyone that's like BBAI is going up this quarter, get ready, right? It's really going to go because of news. I know this and I know this and I know this. Doesn't matter what they know. It's actually not going up right now on the quarter. So if it's going to go up, here's your double inside month. What are we going to do? We'd like to see them take the lows out and then start going back up because then we'd have a broadening range. And if it did that, what would be the targets? Well, if it reclaims this level, it's going to this level. So if BBAI is at 467, can we buy a $7 call if it's like $1 and it's like a year expiration, like a year out or like 6 months out? Yeah, right? We can go we can go $3 out of the money, which would be like 50% nearly. We could go, 100% out of the money. You could buy $9 calls on the cheap. And if it's going to 16 at all-time highs this year, right? You have the $9 calls for 20 cents. And at 16, those $9 calls are worth $7 a piece. Every 20 cents you pay is worth $7 if you time it right. So you can do that. It's just more risky because the more out of the money you go, the more right you have to be. So if you're a new trader, just trade shares, right? If you buy BBAI, if you buy this thing at $4 and it goes to 16, you may, every $4 is $16. Like that's a good chunk of change, right? Yeah, you shouldn't even be trying options. If you're not consistently making winning positions in one universe, trading one setup every day, you shouldn't even be trading options. You don't know how to trade yet. Because most traders are like, I go in, I take one trade and then I'm gone. That can work. But most traders do that because they don't know how to trade. If you knew how to trade and you knew this condition, I really want to trade this one. Like when it's full time frame continuity and we have a pivot machine gun and we break it, I'm in every time. Like you know it. You should be trying to find as many of those as possible because you actually know what you're doing. If you don't know what you're doing, then you need to pull back and learn what to do, which is why we do these streams. We want you guys to know how to know. I want to see you guys like, Alex, look at this one. This one's perfect. Like this looks great. And we're like, yeah, if it's above its trigger, that looks great. And if it's not, get out, find the next one or wait for it to re-break. So you can do what you want, but you need to start small. If you're going to become, a pro MMA fighter 10 years from now, you have to start on the bag. You're not even going to start in the ring. So it should be the same with trading. You can start with paper. Ideally, just start with fractional shares. Work your way up. You no longer see my face. Oh, sorry about that. But it's very important to understand. You got to start small and then work your way up. There's no reason to go into trading, lose your house, lose your wife, lose your kids, lose everything because you couldn't start small. If you start small, the risk is smaller, but you're still learning the skill. And you want some setups? Well, we're getting towards the end of the month. So what we have to be aware of is towards the end of the month, things can change, especially if the month has been doing nothing. So let's just imagine you're a trader or investor, specifically investor. All right, let's go into the new year. What are we going to buy? Well, let's buy some gold, right? We're just going to buy a little bit of gold because it's up too much. Well, it's up more than the SPY. So you only bought a little bit because it's up too much, but that's the strongest one. We're just going to buy a little bit of silver, the banks, whatever, blah, blah, blah. We're going to buy some silver. That one goes up 50%. So, you wish you bought more silver. And then you go to SPY and you're like, wow, I put, most of my investment in the S&P and maybe some small caps, and the SPY is only up 1%. What should I get out of this month so I can free up some money to, invest elsewhere? Well, maybe I should get out of the SPY this month, right? Maybe that's what they're thinking. We don't know for sure. But at this point, traders will be like, SPY, it's really moving around. Yeah, like we're having a great year. It's up 1%. It hasn't done anything. So the question is, these buyers aren't that aggressive. These sellers aren't that aggressive. Which side of this range are we going to expand? And what I think is as we get into into Q1 more, I think we're going to have similar to last year. Because we still have similar problems to last year with energy, energy, I wouldn't say energy problems, but we have a lot of infrastructure and things we need to build, and we haven't built it yet. And we don't know if we're going to have enough money to actually do any of it. So similar to last year when we had the tariffs and they're like, I don't know what the tariffs are going to do. I think we're going to have the same type of move. And what that means is we're going to time the broadening formation just like last year, where you can see this. And you asked for a setup. I'd rather give you, instead of giving you a setup, I'd rather give you something that maybe you haven't thought about. Does that make more sense? Because we've given you all the ways to find the setups. But you see last year we had a reversal on the weekly SPY. Boom, down they went from right there. At the time of that reversal, you can see it was just the weekly group, but they came back to sell more the second week. That matters. Because we had a weekly seller turn into 2-week seller. Then, boom, right here, everything flips red. So we have slight buying. Did it change any of this? No, the sellers are still in control. Destroyed. Then, once we've taken everyone out, they gap it down on the week and start buying. And then the inside bar, rev strat. And you can see they start buying it all the way back up. I think we're going to see a very similar thing. So when we look at this year, on a smaller scale, is what this looks like. We're at the top of the range. We're coming back. We're at the top of the range. If we don't go anywhere, right? If we take the highs out and we don't go anywhere, what does that tell you? Unknown seller. Everyone's buying, but it's not going anywhere. Either those buyers just aren't aggressive, which isn't a good thing, or there's a seller there that we don't know about yet. So all-time highs does matter to me. And I'm just going to tell you, I think, right, I'll share the faith with you, right? I think it might not happen like this, in a couple days. It might take a while. It could take, a couple weeks for this to play out. But I think what we will see is this broadening formation will kick in the other way, timing the top of the much bigger one back to here. And I think we're going to have a very volatile trading year. So what I would suggest, instead of, can we have one setup, please, Alex? Right? Instead of thinking like that, it's like, Alex, can you show me how to know? Because if you know how to know, you're set the whole year. So what do we want to do? If the market were to crash down in here, we want to look for things that are still above their year open. So maybe gold and silver continue to slam into the highs, or maybe there's a panic sell of that as well. But we want to know who's above their year open when that's happening. So if we just filter that, we can say, okay, these are the ones up the most this year. We want to know if that stays true. Because, like we've shown you, if we just go to Zoom today, right? If we imagine that this was the year, right? The whole trading year in one bar. The year open is this. So if we see the first month of the year trade higher, and then it stays green the rest of the year, we have the green year all year, right? That matters. Because then we can have the high enough evidence to buy it at the close, gaps up in this case, right? But that matters. We've shown you the year does matter. So if we go to gold, once again, to refresh your memory, anytime this is green, that matters. So if we see the market pull off the highs and the market goes red on the year, that's your signal, right? Anytime the market's below the yearly open, that's a problem. Anything still above the year open, less problems, because they're selling the SPY, but they're not willing to sell all their positions in, like if we go to CCJ, like if this is still green when the market's crashing out and it's coming down, if this is still green, then they're not willing to sell CCJ as aggressively. They might be selling it, but they're not selling it as aggressively. So we want to buy the things that are green on the year and on the month while the market's going down. And if there is none, right, that's significant market crash. Like that's literally, we're selling everything. It's a gold, sell, silver, sell, right? Doesn't matter. We're just buying the VIX. We're selling everything. So if there is nothing above their year opens, that would be like, 1929 or whatever the biggest crash you can think of, 2008. But I don't think we're going to see that. I think we still see inflationary themes like materials doing well, like materials, gold, silver, gold miners, any material companies that are going to benefit from that, as well as uranium companies. I think we're going to see them continue to do well because we don't have very good uranium supplies. And once they figure that out, uranium prices are going to go like this. AI companies, they might have some like stagflation isn't the word, but they might go a little stagnant if they just don't have enough materials to build the data farms, so to speak, but the data centers that they want to build. So that could be a problem, right? And that maybe that's what causes it. I have no idea. As far as like causal events, we can't really tell the future in events, but what we can tell you is when the market's, at risk of something going on. And if the year is red, they are at risk of going down because they would be going down. How do I know how to know that I don't know what I need to know? But how to know? Signals, pivot machine gun, full time frame continuity. That's how you know. And as far as what we'll then be doing, if the market does come in, What we want to do is buy. So like, let's say, because I'm pretty certain we're going to see this. So take that how you would like to. I'm not telling you to short all-time highs with puts, like 0 DTE puts. That's not what I'm saying. I'm saying over the Q1, I think we're going to see this, and it might go even further because look at the pivots, right? Again, this is nothing to do with what I'm saying, everything to do with analysis. Look at this. If we see a yearly seller show up, does that yearly seller speed up as we go through pivots? It will. And then maybe it starts slowing down a little bit here. But if this starts happening, what we want to do, maybe this happens for a month, right? So the monthly could look something like this, kind of like the previous month, like this. Boom, for a month. And then in this case, they sold more, came back. At the time of April 2025, the strongest stocks were already taking out March's high. And this is very key. So if we go back to April of 2025, and I do have to leave soon, just so you know. It's been a very long stream. But if we go back to April of 2025, and we'll just go to the end of the month, just so we can see what happened. And it may not show me, we'll see. And give me 1 second, I'm gonna sip of water, and we'll be right back. All right, I turned my face cam off just so you guys know I know. How do I know? That's so funny. All right, but so sadly we're not going to see this here. But what I can try and do is I can probably do it with Thinkorswim. Actually, that would be kind of a headache to do. I'd have to count all that out. So instead of doing that, what's another way to do it? And this is only because, you know, this scanner, we started this at the beginning of 2025. We did not get monthly data aggregated until well into 2025. We started with the low time frames. So we might have to get them to refresh all that. Sadly enough. Let's see if we can go to like a weekly. Yeah, so we can go to the weekly. So let's just go to the strongest stuff on the first week of April and see, right? And we can backtest our scans with this, which is the coolest part about this. We can backtest our scans. You can see it's like inverse SOX S, right? So short the semis, VIX, right? SQQQ. So these guys all going higher. But is there any specific names? GameStop was going up, right? Boulder, Ali. So if we go to those names, oops, let me go replay just so we can make sure we're at the right spot on the month. And what we want to do is we want to identify where the strongest stuff is. But if this is the first week of the month, let's let it play through a little bit. So you can see they really got destroyed the first week of April. So anything that was green, starting off April by going higher, that's where the buyers were. So where were they buying? VIX, short QQQ, short SPY, short Dow, short the semis. So this is where you'd want to buy, right? We go to SOX S. Where would you be buying? Anytime above 3183. You can see target hit and then reclaim. So if we go back to exactly that condition, we knew they're going up. You can see the magnitude. So we already know the target. Anytime that's green, we know that's true. So you can see this is how we buy during a bear market. Boom, right? And it's fast, 60% in like days. Look at this. Right, 3 days, two reversal, buy, 2 buy, gap up, sell, get out. Then when it went green here, you could have tried to buy it again, but pretty neat, right? So we can see exactly where the strongest stuff is during that first week of April. That's where we'd want to be buying. The same thing's true for specific stocks. Now, since this is a weekly, right, it doesn't give us the exact data. We want the stuff taking last month's highs. We just don't have it here, but this gives you a great idea of it. So to give you another example, maybe if we go to the beginning of May, we might have that monthly data. I'm not sure exactly what dates we added it. See if we go here. There it is. So end of May is when we added the data. So if we go to things in April that were inside, and that would be right here inside April, May. Yep. So anything that was inside while the market puked technically was stronger. So if we look at this, April, if we go to GameStop didn't go down. In fact, it was going up 24% while the market went down. So technically it's stronger. However, it is an inside bar. So we know we have our levels that are important if we come back through as a rev strat or if we're above them. So if we just were to let this play out and see what happens, and I don't have the patience or the time right now. We can see when this breaks here, for sure, anyone that shorted GameStop, this has to be stronger. So at the point of that being true, where's the nearby pivots? This, boom, blows them out. Instantly 20%. So if we go to the daily, at the time of that being true, you see it's a little tricky in here, but they go red. There's your buyer. There's still a buyer. If we go at our continuity, is this daily seller doing anything? Nope. The week is green. The month is green. The quarter is green. It's going up this week, this month, this quarter. 2, the daily buyer's back. The daily buyer, there's our target. Gap it up, sell it, get out. So you can see, we can kind of, I always say this, and I turn the face cam on. We always say it's like undressing the market, because what you're doing is you're looking at the funds are selling everything besides this little tiny list of stocks where there's definitely buying, and whoever's shorting these stocks is getting blown out of their short position. So we can quantify that exact condition. So any of those names that are on this list would technically be stronger. And you'll see by the end of the month, they weren't doing that much on this list specifically. There just wasn't really a trend here as some consumer cyclicals. But what we will see is when big things happen like COVID, where there's definitive themes like Zoom. If we go to SPY on the quarter during COVID and we see what happened. Boom. COVID crisis. It went red here. What are they doing this quarter? Boom. Selling this quarter. Down they go. There's your level of reclaim. There's your target. Would we want to buy SPY, the one that's down the most? We would not. What do we want to be buying? Zoom. Zoom did not go down. In fact, it was going to Florida. There's your 1, 2 down, 2 up, above 78.36. So if we just look at Zoom and watch this play out with SPY next door, like this, we can see what happened in real time and how the scans allow us to find this. So we look at Zoom. We're going to go back to the quarter. We go to SPY on the quarter. Watch what happened. So they were selling Zoom while SPY was going up. So notice, whoever is shorting Zoom in here, technically they're right. And then Zoom breaks. SPY gets destroyed. Zoom went up last quarter. So when SPY firms up, Zoom has to be stronger than SPY, does it not? So we go back, just since it was really fast here. We didn't have to buy Zoom first. We didn't have to be the first one in. However, if Zoom is up 100%, the market's down 30%, this is where the institutions are buying. Like, we took the close off. There they are. Let's go play with them because they might have more to buy. So if we go to 3X, anytime this is green, that's when the institutions are there, right there. Anytime that's green. The buyers inspire green. So we're buying the strongest thing while the market firms up. Anytime this is green at 144. And you'll see, boom, another 42%. SPY goes up 25%. This is up 70% in a quarter. Then SPY reverses the quarter inside up. Anytime Zoom is green, that's a good thing. If it's red, we have to be aware of profit taking, right? You can see it goes back to green, another 20%. Boom. Anyone short Zoom, they just got blown out, 90%. And then even more. So you can see they're buying Zoom while they're selling the whole market. For sure, institutional buying, which confirmed 2, 2, 2. And if we zoom down to a monthly chart, you can better time, potentially profit taking of Zoom when we get a reversal. So you can see right there, the shooter month, this was your first signal to the downside. And then it goes inside bar, so it's not going anywhere. Then 2. Then you see they go 2 down. So now, this point, you can see the quarterly guys, they sold it down. They tried to come back and buy more, which gives you a little bit of gains, right? But it has to stay green. Notice this. These quarterly guys are buying. SPY's still going up. When this goes red, those quarterly guys get in trouble. And as you'll see, right? Zoom reversed the quarter. SPY is still going up on a quarterly basis. So this is that institutional group now getting out of Zoom. And they're rotating into other things. But when we see the market go down, that's how you find the leader, right? So if we go to when we called the uranium long, and this is the last thing I'm going to say, and then I got to get going. But we called this much, a long while ago. And we talk about uranium a lot, so give me a sec. Let's see. Here. And no, not there. Where was it? I don't know if I'm going to be able to find it, but we did call this in real time. When we look at it, you'll see the hammer at the bottom of the range, broadening formation. So if we go to uranium, notice this. If we go on monthly uranium and we get out of this stuff. So look at uranium here during this month compared to indexes. Uranium was above its open, so there was more buying in uranium than SPY, right? We didn't have any evidence of a monthly buyer, although it did rally all the way back, so it could have been a monthly buyer. We're not sure. SPY breaks, uraniums break. Uraniums are still above their month open. SPY isn't even in force. It's not above the signal break. Uraniums at that point had to be stronger. Therefore, they're stronger than the SPY. The magnitude would be 33. Right, 33.99. So it's going to 34, 1 penny above that anytime this is true. And you'll see, boom, did the pivot speed things up? Pivot, 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 pivot. All these guys. It did. All those shorts got blown out, and then SPY blows out the shorts too. So we can line up the signals across multiple assets like SPY, uranium. You'll see tech did the same thing, which told you to buy NVIDIA, right? Timing the signal here at 115. You'll see industrials did the same thing right here with your defense sector as a simultaneous break. So at the point of this all being true, there's many opportunities, which is what we said in our monthly vid. So if you want to go back and you want to go look, since we're going to be ending the stream off here, oops. If we go to youtube.com, let's see, /Alex's options. Let's see if we can search this stuff up. Full. This would be the video. If you want to go and see what it looks like to know, right? We're not guessing. We know. If you want to see what it looks like to know, that video that I dropped in the chat just now, this is where we discussed the whole market recovery because we saw every sector, for the most part, setting up the hammer actionable signal, telling us the market's about to reverse across every single sector. And that matters. This is the highest probability thing you'll find. So if you want to learn more about the simultaneous break, which is what this is, I have videos on my channel. If you just go Alex's options like this, Alex's options, simultaneous break. Right here, top one, simultaneous break. You can see tons of examples and what they look like. This is all educational stuff. But hopefully you guys enjoyed the stream and learned something. And again, stick to those pivots, full time frame continuity, actionable signals, go after them. Like we should just go into the market this year and just obliterate people. That's what we want to do. Cause everyone to take losses with our signals. But that's all I have for you guys. So have a good rest of your night. I'll get my nightly video out. It's probably going to come out late, but we always have a nightly vid when I put it out. You can watch it. It's like 20 minutes, sometimes a little longer. Sometimes it's like 5 minutes. You can watch it prior to the market open and have a good idea of where the reversals will be, where the signals are, and where the strength is this week. And we do it every week, every night, every month, every quarter, every year. So go check